Hey everybody, this is Jim at freechartvideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only, and it is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. I am not a licensed professional. I'm just a guy who draws lines on charts, and buddy, we got some charts to look at. First up, the Nasdaq Composite just today broke the neckline on its head and shoulders top pattern. This pattern is pointing to a minimum downside move of about 2340. So looking about for a 220 point drop. In addition, from this neckline, which is roughly another 200 points minimum. Please keep that in mind, minimum. Sometimes these tops, there was a top like this in the fall of 2007. And the minimum on it, not in the Nasdaq, but in the S&P, and the minimum in that was like what, 100 points or something like that. And you would think, well, now we're down to, wherever 1400. That's a done deal, and that set off the wheels in motion that eventually took the S&P down to, as we know, 666. So there you go. There's the Nasdaq. Broken pattern. Not say a broken pattern, a confirmed head and shoulders top. Russell 2000, and this is important. Head and shoulders top, breakdown, sold off huge today, down 5.5%. The minimum target from this is about 700. Now, why did I say this is important? Because if we get that 700, that means this line right here will break. And even though this is this looks like a huge inverted head and shoulders pattern, I really wouldn't count on that because that spans so much time and it has such a huge range to it. This is looking a lot more now like a double top than it is a head and shoulders here. Now, if the markets were to suddenly just bounce on this and take out that black line, okay, then maybe. But because, you do expect a back test of this line, and I've been waiting for it. But, I'm going to let this play out and see what gives. There should be, after such a swift move as we've had here the past few days, there should be a pattern involved, something other than just a hairpin turn. You just don't get those hairpin turns. So, here we had an inverse head and shoulders appear right there. And so anyway, that's the Russell. Here's your S&P. I'm just going to get rid of a lot of this stuff because, frankly, there's only one thing that really matters right now, and that's this pattern right here. All these little channels and stuff that we were looking at for the past, 5 months or so. Doesn't do us any good right now. I will leave this line right here though because this could produce a bounce. Frankly, I thought we were going to get a little bit of a bounce today, and we did not. Let me show you what I was looking at. Let me go to a 5-minute chart. Well, now I shouldn't have gotten rid of that line. I was looking at this line right here and right here, and it was just seeming to me, and this is where I sold my SPXU, thinking we'd rally back to this line right here, which the market didn't even have the strength to do that. So I sold that a little early, but good news is I bought it here and sold it there, so that was a very quick trade, but I wish I'd held or I wish I could have seen what was coming, but I couldn't see what was coming. I was just going by this channel, and By the way, the accounts that I had, the SPXU in, all that did was give me a little salve for the rest of the pain, because I am looking for a rally. I'm looking for one up day to sell the majority of my long positions. I was hoping we would hit this line today, and I would have done so at that point, but it never happened. So I'm kind of stuck with those right now. But again, this pattern is looking for a minimum of 1160, and quite frankly, if it's going to go there, why not go ahead and finish the job, come test this old neckline from the inverse pattern right here that never got tested. So now's the point where we start thinking about what's going to happen in the long term. Right now, the intermediate term is clearly down. Short-term call for today was down. And I think that the long term, I'm still leaving bullish. But, you know, that's only because I'm not sure this is a major top. If we take this out and we set a new low down below here, then I think you have to start considering the fact that this may have been a short bull market. Look, I know some people that might look at technical analysis and say, well, it's kind of stupid because you can't see into the future. Well, no, you can't. But you know, neither can Elliott wave people, and neither can people who read all kinds of other types of indicators. The fact of the matter is this: that it's an evolving process. Everything you do with technical analysis is an evolving process. So right now, like I said, we're looking for 1160 minimum, probably lower, frankly. Then we see what kind of pattern might develop that tells us this is going to head back up. Look, guys, I appreciate you watching this. Oh, let's look at the Dow. Here's the Dow Jones Industrials, and here's its head and shoulders pattern. The breakdown, target 11,000. Boy, just ugly, ugly, ugly. Again, I'm not saying 11,000 is where it bounces. We've got this trend line right here that is, well, forget that. That was an experimental line. I should have pointed out this green line, however. Hopefully that line doesn't get tested, because that would be about another 1,000. That'd be a loss of about 1,300 points from here. But never say never. So anyway, like I said, what I'm personally doing is I'm personally looking for a nice opportunity to liquidate some longs on a rally. I think there will be. I believe there will probably be another pullback to test the neckline. I don't think that little thing we got yesterday was the bona fide actual pullback. Because listen, this is what happens. A lot of times when you break a major resistance or support area, you'll break it by 1.5%. There'll be a quick little pullback. In this case, it broke down, a quick little pullback. Then it really starts to get momentum. But then there's a more serious, often a little bit more serious rally that gets going. For example, if we look back here, let's take a look at this pattern kind of as an example. Let's draw our lines. Here's the neckline. Come on. My mouse is screwy. Okay, there's the neckline. It broke down. There was a little tiny pullback. Then it really got slammed down. Then it mounted, and it took it a while to do. Then it mounted a more serious attack to that neckline, and that was the one that really gave way. So I think we are in the still in the initial breakout phase of this pattern, and I believe there should be a pullback to this to over the 12,000 area eventually. And if that happens, and then there's continuing signs of more weakness, then boy, howdy, watch out. Look, you know, if a few more levels of support are taken out here, I may have to rethink this whole bull market thing, frankly, because you got to be on your feet. And certainly today was a horrendous day to be a bull. And like I said, all I did was save myself about market's down what 4.5%. My positions I took yesterday helped just cut my losses in half. So not a good thing. But look, take care. There will be opportunities as this market unfolds, and let's see if we can find them together. Thanks again for watching the video. I hope that today didn't catch you by surprise. If you'd been looking at the videos over the past couple of days, it shouldn't have, though the degree of it honestly caught me by a little surprise too. But look, take care. Let's see what the markets bring us tomorrow.